Hello, everyone. This is Jim coming at you here. Got some important information to share with you here. A lot of people are overlooking this self-employment tax credit, or sometimes just called it SETC, SETC. And I got a couple notes here. And some people think maybe they don't qualify, or it's not worth filing or whatever in that regard. So just want to clarify some things here. I think a lot of people would effectively qualify or be money ahead if they were to file for this. So anyway, and now technically you have until about April 15th of next year to apply for both 2020 and 2021. Or if you filed an extended return for 2021, then you basically have till October 2025 to file for that if you didn't extend it. Now, one thing to keep in mind here, the actual time frame for 2020 and 2021. The 2020 time frame is actually from like the end of March, April 1st through September 30th of 2021. Okay. And then, March 31st of 2021, excuse me. And then the time frame for 2021 follows that for basically 6 months, beginning of April up through September 30th for 2021. So actually it's only a 6-month time frame for 2021. And of course, we need to document basically during that time frame when we were affected by COVID within 2020 and or 2021 or both. And of course, this is for people who were self-employed or got paid on a 1099. Now, if you made more money in 2019 than 2020, you can use your wages for 2019 to qualify for 2020. 2021, you got to use basically 2021 wages. And what you want to look for is the amount on your Schedule SE line 31 or line 6 on Schedule C, and this is the money, the amount that you would use to basically determine what you would get back in terms of a refund for your taxes there. And so you can utilize up to 10 days. So you basically calculate how much you made per day. You multiply that by 10 days. That's effectively what you're getting back in terms of a credit. So you basically calculate how much that money was, you divide by 260, you get a number, you multiply it by 10. That's how much you're making per day. And you can qualify for up to 10 days in each of those years. Now, where the bigger money is if you had kids under 18 that were out of school, say the school closed down, and there again, you can get up to $200 a day for 50 days. If they're under 18 in 2020, but in 2021, you can get up to $60, 60 days, $200 a day for up to 60 days. So as you can see, that's about $10,000 for 2020 and $12,000 for 2021. Now, those numbers are there regardless of whether you had one kid or a dozen kids. Now, however, though, if you had multiple kids or whatever, both spouses could qualify, then yeah, you could then basically double dip, and but you could both claim this credit and utilize multiple kids. So basically, if you had COVID, had to quarantine or whatever, you can get for yourself up to $511 per day for up to 10 days for each of those years. So basically, you're getting the maximum $5,110 for each of those years, 2020, 2021, although, like I said, 2019 can be used for 2020. And you can also get the credit for taking care of a sick relative for up to 10 days, up to $200 a day. So the most you're going to get is $2,000 for 2020, 2021. Now, here's something that a lot of people haven't thought about that could make them want to go for this, even though they basically maybe break even in terms of what they pay versus what they get back. Uh, Now, kind of the bad news of this is that it's basically taken about 6 months from the time you file to get your refund back. Of course, it's not taxable. Now, but the good part of that is you're earning about 8% interest going back to when you originally filed. So for 2020, if you originally filed in 2021 and you file right now, you might get 3.5 years worth of interest for at 8%. So if you've got, say, let's say $10,000 coming back to you, then that's approximately $800 a year times 3.5 years, or about $2,800 approximately. And then, of course, for 2021, there again, you would have filed a year later, so you would not get 3.5 years, but like 2.5 years, $800 a year, so approximately $2,000. So this could be a total of about $4,800 total in interest. I don't know anywhere that you have a safe investment that's going to pay 8% interest per year. The best CDs I see right now are not quite 6%. I've seen one was 5.9%, but nice little rate of return there. So consider that. So that interest there could be a deciding point that makes you want to qualify, even if you're going to maybe break even at first, because you're not you don't have to pay until you see what you're going to get back. So the CPAs will take a look at it and see, okay, you're going to get this much back. Do you want us to go ahead and file? Maybe the amount to file ends up being $500, and you're only going to get $500 back. You go, well, I don't think I'm going to file because I'm not making any money. Well, you consider the fact that you're going to get interest on that money. Then, plus I can also show you ways how you can get money back on your own filing in a sense. So contact me. There's a link there in the description. You can click on that, watch a video there. You can put your information in there. Somebody will contact you and see if you qualify. I can contact you and just ask you a few questions to see if maybe it's worthwhile for you to file. Thank you very much. Look forward to hearing from you. God bless you. Make it a super dandy, fantastic day. Bye now.